Welcome to the Nat Business Solutions YouTube channel, where we tackle the IRS and help you come out on top. Got a tax mess? I'm Josh, the CEO of Nat Business Solutions and an EA with over 20 years of experience in tax. If you have a tax question, please call me at 806-576-3296, and you can leave a voicemail with your question. We'll do our best to get you an answer. Now, it looks like we have Jordan from Seattle on the line. Hello, you're live with Josh.
Hey, Josh. I'm totally freaking out right now. I botched my taxes big time, and I need your expertise on how to move forward.
Jordan, what's up, my friend? Tell me more.
I did my own taxes this year with some, online software, and, I thought I was a tax wizard or something, I guess. Then I found a W-2 I completely forgot about. $25,000. It just slipped my mind. It was from a part-time gig thing I don't have anymore. I already filed my return and, got my refund. But now I'm like, yikes, Josh, can you help? I'm scared that the IRS is gonna throw me in tax jail or something. How do I fix this?
Oh, Jordan, you stumbled onto a classic tax issue. But the good thing, no jail time for you, my friend. Listen, this is definitely fixable. But fixing this yourself could be like trying to untangle Christmas lights in the dark. Kinda tough. You need to file the Form 1040X, the amended return, to add that $25,000. That's where my team at Nat Business Solutions comes in. They're tax advisors who can handle this for you to ensure you have a win with your taxes. All right?
Oh man, that sounds really good. Can you tell me more? What would NAP do for me?
Here's the deal, Jordan. At NAP, we specialize in cleaning up tax messes like yours. We prepare that 1040X for you by plugging in your original numbers, adding the $25,000 W-2, and calculating the difference to ensure your return is accurate and correct. We'll attach that W-2 and any affected schedules. If this income bumps your tax bracket or tweaks your deductions. We'll even double check your entire return to catch any other issues that might be hiding. Our goal? Make sure that you and the IRS are happy and get you back to sleeping at night.
That's good. But since I already got my refund, what will happen? I'm going to owe now, like a lot? And what about penalties? Gosh, I feel like I'm in huge trouble.
Deep breath, Jordan. You're going to make it. Adding that $25,000 means you'll likely owe some taxes, so maybe a little bit of interest with that. The IRS will send you a bill on those interests because we can calculate the tax due. Now, it's a good question with penalties. If it's an honest mistake, we can file that amendment quickly. NAP can help make a case to minimize or in some cases, get the IRS to waive any penalties. We will really try to sweet talk the IRS for you.
Oh, that's really good news. I've got to tell you, I'm so done with this DIY tax stuff. How do I get started with NAP helping me fix this?
Here's the plan. Head over to our website, tax.pro, and fill out our contact form. Mention you're a Nat Business Solutions YouTube follower, and we'll prioritize your case. One of our tax pros is going to reach out, grab your details, and handle that 1040X. We can often e-file that return for speed, but if it needs to be mailed, we'll take care of that for you as well. Oh, and pro tip, don't wait. The sooner you fix this, the less interest you're going to owe.
Man, Josh, thank you so much. I'm heading to tax.pro right now. Thanks again. This is such a relief.
Yeah, Jordan, you've got this. You're in good hands with us here at NAP, and we're here to ensure that you're advised well on your taxes throughout the whole year. Hey, man, thanks for calling. All right, y'all, it looks like we have another call. This is from Alex in Chicago. Alex, you're on the air with Josh. How can I help?
Hey, thanks for having me. I don't normally call into this type of show. I'm a little nervous. I've been hearing a lot online about how paying U.S. income taxes is voluntary. Is that true? I've even heard some people say the IRS even admits it's true. So, what's the deal with this?
Hey, this is a great question, Alex, and you're not alone. That's why I was kind of chuckling, wondering about this. It's a common misconception that's been floating around for decades. It's often fueled by fringe theories or misinterpretations of IRS language. But let's break it down step by step so everyone listening can get the facts straight. So the short answer is no. Paying U.S. income taxes is not voluntary. It's a legal obligation enforced by federal law. So now let's unpack why people think it's voluntary and then why they're wrong. First off, where does this voluntary idea come from? It stems from the IRS's own terminology. They talk about voluntary compliance in their manuals and statements. For example, the IRS mission statement emphasizes that the tax system relies on taxpayers voluntarily complying with tax law. Sounds optional, right? But here's the key. Voluntary in this context doesn't mean you can choose to opt out, like, stopping a Netflix subscription. It means the system trusts taxpayers to self-report their income. That is, calculate what they owe and pay up without the IRS having to knock on every door in the country. It's about efficiency. Most people comply willingly just to avoid trouble.
Oh, okay, I see. I guess that kind of makes sense. So, what if someone you know just decides they're not going to pay their taxes? Can you do that in the U.S.? Or does the IRS actually enforce this sort of thing?
Well, sounds like you're still struggling with the concept. So let's talk about it a little bit further. If our system were truly voluntary, there would be no penalties, right? So let's think about this. If you were to give money to the church and then all of a sudden you stopped, does the church penalize you for not giving them money or the nonprofit? No. This is starkly different, right? The foundation of U.S. income tax is the 16th Amendment to the Constitution that was ratified in 1913, which gives Congress the power to levy tax on income without apportionment among the states. Then there's the Internal Revenue Code, or the IRC, Title 26 of the U.S. Code, which spells out exactly who has to file and pay taxes. If you're a U.S. citizen or a resident with income above certain thresholds, you're required to file a return and pay the tax that's due. Remember, a fine is a tax for doing wrong. A tax is a fine for doing well. Now, if you don't, the IRS has a toolbox of enforcement actions. It starts with notices and assessments. Ignore those and you'll rack up penalties and interest. Up to 25% for late filing or payment plus daily interest compounding. Things escalate from there. They can place liens on your property, levy your bank accounts or wages, seize assets, or even refer your case to criminal prosecution. Willful failure to file or pay can lead to fines of up to $250,000 and up to 5 years in prison per offense. We're talking real consequences here, not optional at all. Just last year, it's estimated that the IRS foreclosed on around 500 properties, taking them from taxpayers that were failing to comply. Not a good plan.
Whoa, I had no idea. That's really, really intense. So, I've seen videos claiming taxes are unconstitutional or that wages aren't really income. So, is there any truth to that stuff?
Well, I'm glad you asked. I feel like I'm beating a dead horse, but I'm going to answer this one and we'll hopefully get to the bottom of why you're so uncertain. Maybe less time on TikTok would be a good plan for you. But all of those are classic tax protester arguments, okay? and the courts have shot them down repeatedly. For instance, the claim that the 16th Amendment wasn't properly ratified, debunked in multiple Supreme Court cases, or that only certain types of income are taxable? Nope. The code defines gross income broadly as all income from whatever source derived, including wages, salary, tips, you name it. Then you have groups like the Sovereign Citizens. They push these ideas, but they've lost every major court challenge. The IRS even has a page dedicated to the truth about frivolous tax arrangements to warn people against them, because falling for this can lead to serious legal trouble. Let me share a quick real-world example to try to drive my point home. Remember Wesley Snipes, the actor? Was convicted in 2008 for willful failure to file tax returns. He owed millions and ended up serving 3 years in federal prison. Yikes. Or take Irwin Schiff, a prominent tax protester. He spent over a decade in jail promoting these myths. These aren't isolated cases. The IRS prosecutes hundreds annually for tax evasion.
Oh, wow. I had no idea that it was that serious. So, for everyday folks like me, what's the best way to handle taxes without issues?
That's the right move. Shifting to prevention. Alex, compliance is key. So I would tell you to keep good records, report accurately, and file on time. If you're self-employed or run a business, the tools that we offer at KBS can help with deductions and estimates. And if you owe more than you can pay, don't ignore it. Set up an installment agreement with the IRS. They actually prefer working with you rather than forcing you to comply. Remember, April 15th is the tax deadline, but extensions are available. Just pay what you estimate you'll owe to avoid any additional penalties by April 15th.
Okay. Thanks. This really clears up a lot. I definitely feel much better about paying my taxes now.
No problem, Alex. Knowledge is power. To the listener, if you've got a question like this, call in 806-576-3296. You can leave a message or visit tax.pro and drop us a line. Taxes might not be fun, but understanding them keeps you out of hot water. Now, don't forget, hit the subscribe button, or if you're enjoying this video, like it. We really appreciate you tuning in.
Unlock the power of full-service payroll with Payority. What is full-service payroll? It's the ultimate hassle-free solution for managing your business's payroll needs. With full-service payroll, every aspect of payroll processing is handled for you, from calculating wages and taxes to filing compliance reports and ensuring timely payments. You get peace of mind while saving time and resources. Why Payority's full-service payroll stands out. Complete payroll management. We handle everything: wage calculations, tax withholdings, direct deposits, and more. Compliance made easy. Stay worry-free with expert handling of federal, state, and local tax regulations. Employee self-service. Empower your team with easy access to pay stubs and tax forms through our secure portal. Dedicated support. Our payroll experts are with you every step of the way, ensuring accuracy and reliability. Ready to simplify your payroll? Visit Payority.com to learn how our full-service payroll solutions can transform your business.
Okay, up next, let's see. It looks like we have Sarah calling in from Chicago. So, hey there, Sarah. What's up? Sarah?
Hi, Josh. How are you today?
Well, it's a great day here in Texas, so I'm doing well. How can I help?
I'm like sort of a history buff, Also, I own a small business, and I've always wondered about the origins of the U.S. income tax laws. They really seem to have, been around forever,
but I know that's not, true. Could you break down that history for me?
Well, this is a good one. As a CEO and a tax pro, of course, my livelihood, I deal with taxes daily. And the history is fascinating. It's tied to wars, politics, even the Constitution. There's a great book on this called The Sex of a Hippopotamus. Now, it's a funny title, but the reason it's called that is because the sex of a hippopotamus is difficult to determine. And that book is all about the weird history of U.S. taxation. So, I definitely don't mind diving into some of the basics. Let's go back and start with the early days. During the Civil War, in 1861, Congress passed the first federal income tax to fund the Union Army, a flat 3% tax on incomes over $800, under President Lincoln. Then, in 1862, the Revenue Act made it more progressive, with rates from 3% to 5% on higher incomes. But it was temporary and repealed in 1872 once the war debts were paid down.
Okay. Wow. I had no idea. So, no income tax after that. What happened exactly?
Well, Sarah, things paused until 1890s. Amid growing economic inequality, Congress tried again in 1894 with a 2% tax on all incomes over $4,000 via the Wilson-Gorman Tariff Act, but the Supreme Court struck it down in 1895 in Pollock versus Farmers Loan and Trust Company, ruling it unconstitutional because income taxes were direct taxes that needed to be apportioned among states by population. That roadblock held until the Progressive Era.
Okay. So, how did we get the income tax we know today? Like, the last time I looked at my tax return, I was paying a lot of taxes. So,
by 1909, there was public support for taxing the wealthy to fund government programs. Congress proposed the 16th Amendment, ratified on February 13, 1913, giving Congress power to tax incomes from whatever source derived, without apportionment. That same year, the Revenue Act of 1913 launched the modern income tax, 1% of income on incomes above $3,000 for individuals and $4,000 for couples, with surtaxes up to 6% for the ultra-wealthy. Initially, it only hit around 1% of Americans, so at that time, 1% of Americans paid 100% of taxes. Think about that.
That's really wild. Just 1%? So, when did it become something everyone pays?
The big shift came with basically the World Wars. So World War I pushed the top rates to 77% by 1918 to fund the effort. Then World War II made a mass tax. The Revenue Act of 1942 expanded it to most working Americans, and payroll withholding started in 1943 for easier collections. Rates peaked at 94% for the highest earners during World War II. Post-war, we saw fluctuations, right? So we have Kennedy's cuts in the 1960s. We have Reagan's Tax Reform Act of 1986, simplified brackets to 15% and 28%. And then, more recently, we have Trump with the 2017 Tax Cuts and Jobs Acts, which dropped corporate rates to 21%, introduced QBID, qualified business income deduction, and so on. Now we've got 7 brackets, lots of tax deductions, and multiple credits. I'm telling you, this is one complex beast.
Okay. Well, that's like incredible. From war funding to everyday life. Man, thanks for breaking that down for me. It really puts my tax prep in perspective, you know?
It's my pleasure, Sarah. It's a good discussion, and I really think it's valuable to learn. If you're a business owner, you should definitely consult a tax pro, somebody like Nap Business Solutions, to stay compliant and optimize your tax strategy. Hey, thanks for the call. Up next, we have Jamie from Dallas. What's up, Jamie?
Hi, I recently graduated from college and I'm about to start my first job. And, taxes seem so complicated, you know? Can you explain the basics of how the U.S. income tax system works? From start to finish?
Sure, I will do my best. There's a lot to unpack here. So the U.S. income tax system can feel very intimidating at first, but once you break it down, it's manageable. So let's walk through it step by step. I'm going to aim to keep this clear and concise, kind of like Taxes 101, and hopefully this will make sense. Also, if you've got more questions about this, go back and kind of rewatch or revisit this section, and hopefully that'll help. So first off, the U.S. federal income tax system is a progressive system. That means the more you earn, the higher percentage you pay in taxes. Most people get this confused with flat tax. Instead, we actually have tax brackets. So, for 2025, the brackets for single filers start at 10% for incomes up to almost $12,000. Then at 12% for incomes up to almost $47,000, and that's taxable incomes, and so on, which goes all the way up to 37% for incomes over around $600,000. Those numbers adjust slightly each year for inflation. Here's where most people get it wrong. Our system is not as simple as taxing your entire salary at one rate. It's marginal. So, if you make $12,000 of taxable income as a single filer, you're going to pay around $1,200 in taxes. Now, this is what's interesting. Let's say you make $1 more and you move into the 12% bracket. Most people would assume your taxes would be 12% of $12,001, which would be $1,400.12. Most people would be wrong. Instead, your taxes would be $1,200.12. Only the $1 in the 12% bracket is taxed at 12%. Your other dollars are still taxed at 10%. So, the next big hurdle. What counts as income? Well, pretty much everything. Wages from your job, tips, interest from savings, dividends from stocks, rental income, even gig economy earnings from apps like Uber or DoorDash. If you're self-employed, you report that type of income on a Schedule C with your 1040. The IRS considers worldwide income for U.S. citizens, but there are credits. If you earn that income and pay foreign taxes, you can take a foreign tax credit. Okay, Jamie, next step, filing your return. Most people file annually by April 15th, but you can extend your return to file October 15th with a 6-month extension if needed. But just remember, this part's important. Extensions are for filing, not for paying what you owe. You start with the Form 1040, which is the main individual tax return. If you're employed, your employer is going to send you a W-2 by January 31st, showing your wages and withheld taxes. Freelancers and some small businesses, those guys, those gig economy guys, they're for sure going to get those 1099s, and that's what they'll use to report their income. To figure out what you actually owe, we subtract stuff from your gross income, okay? So first adjustment, like student loan interest or IRA contributions, give you your adjusted gross income or AGI. Then you choose between the standard deduction for single, it's around $14,025, or if you have big expenses like mortgage interest, maybe a lot of expensive medical bills or charitable donations, you would consider itemized deductions. After deductions, you get your taxable income. Then we apply the brackets that I was referring to early to that. Subtract any credits like the child tax credit up to $2,000 per kid, thereabouts, or earned income tax credit for those low earners, And you guessed it, that's your tax liability. If your withholdings or estimated payments cover that tax liability and you overpaid, then you're going to get a little bit of a refund. Or if you didn't have enough withheld or didn't make those estimates, you will pay the difference.
Whoa, that's a lot. I'm trying to understand. I think I caught most of that, but what about state taxes? And how do I avoid mistakes?
This is definitely overwhelming the first few years when you're trying to get a handle on what it's like to file those returns. But let's talk a little bit about those state taxes. So most states have their own income taxes, which piggyback off of federal rules, but have different rates and deductions. So, for example, let's look at Texas, where you are from. So, Jamie, you live in Texas, and Texas has no state income tax. So how does Texas get their taxes? Well, you're going to watch out for sales tax, and if you own property, property tax. Let's look at California or New York. For those states, you can expect to pay around 5-6%, and their rates can go all the way up to 10%, and that's on top of that federal rate. Ouch. To avoid mistakes, I would recommend keeping really good records. Keep receipts, mileage logs. If you deduct business travel, for sure, I always recommend you hire a tax pro like an EA or a CPA or a tax attorney to get help with all of this. Common pitfalls would be like forgetting to report all of your income. The IRS gets copies of your W-2s and 1099s, so they'll know if you left something off. Or if you missed a deadline, which can mean penalties of up to 25% of what you owe. Also, life events change things. Getting married, then you can file a joint return with your spouse for potential savings. Or if you have a kid, you have a new baby, there's more credits. Sometimes if you start a side hustle, that might mean that you're going to owe, if you have net profit, mean you're going to owe some more tax. One of those taxes is self-employment tax of around 15%. That's going to go to Social Security and Medicare. So it's a lot.
Okay, but what if I can't pay what I owe?
Yeah, that can happen, especially if you don't have enough withheld, or if you started a business and you didn't make any estimated tax payments. The IRS offers installment agreements. It's like a pay over time with interest situation. But keep in mind that the IRS is not a bank. They're awful to owe money to. If you have a balance and can't pay it, I'd recommend trying to borrow that amount from maybe like a local credit union so you can pay the IRS. You definitely want to act fast. Ignoring a balance with the IRS or the state can lead to liens, it can lead to levies. It's just not a good thing.
Wow. Okay, thanks so much. This clears up a lot.
My pleasure, Jamie. Taxes are a civic duty. Funding roads, schools, the military, and so much more. Understanding them empowers you. So it's important to have a clear understanding and get with a tax pro. They're going to help you out. All right, I've got time for one more call. Hi, Nat Business Solutions YouTube channel. Who's on the line? Are you there?
Hey Josh, it's Mike from Kansas City, Missouri. As a new business owner, how does the tax system differ for businesses versus individuals?
Hey Mike, congrats on the business. For businesses, it depends on the structure, and this can be a little bit complex, right? Sole proprietors report on the 1040 with the Schedule C. It's maybe the simplest way to file a business return. Obviously, you're going to be personally liable for those taxes, so that's an important differential. Other ways of forming would be a partnership or maybe an S corporation. These are pass-through entities, meaning that they file their own return, and then you get a K-1 from them, and that K-1 is where you report the income on your personal return, and that's where you pay the tax. So they're taxed at the individual rates. Then you have a C corporation. This is the guy you hear of in the news that they actually have a corporate tax rate, and that's a flat 21% right now. Deductions are key. Business expenses like office supplies, marketing, even home office, if it qualifies, like a dedicated space that you use regularly for business, those things are important. Track everything. If you're growing and your business is expanding quickly and you need some help, I would recommend you hire a good bookkeeper, somebody that can help you, that's in your corner, help keep track of those deductions. Self-employed tax hits if you're not a corporation, but deduct business use, like a car, something like that. That's about 58.5 cents per mile as a standard deduction in 25. We can take things like your health insurance, potentially retirement contributions if you're not doing the Roth. Those are things that are going to help you. One thing I see that happens a lot in small business, especially if they're new to it, you want to watch out for sales tax if you sell goods or services that are taxable. And of course, this varies by state. You should contact your local comptroller to learn more to see if your products or services are subject to sales tax. So that's the one that I would definitely have you watch out for.
Okay, how do I audit-proof myself? Like my business.
Audits are rare, so less than 1% of the taxpayers are audited. But if you're flagged, they're going to look at those big deductions, they're going to look at math errors. You definitely want to respond promptly. As an EA, I represent clients before the IRS. We are similar to attorneys in that regard. I recommend that you keep your records for at least around 7 years, and in the event you get a notice of an audit, keep in mind it won't say audit on the notice, it'll say exam, then I would definitely tell you to reach out to an EA or a CPA or a tax attorney, somebody that's going to be able to help you and help represent you well in that type of situation.
Okay. Thank you.
Thanks, Mike. Wrapping up, the U.S. tax system rewards planning, okay? You can save in a 401k, you can claim credits, you can stay compliant. For more information, you can always go to irs.gov or consult a pro at tax.pro. That's it for today's segment. I hope that you tune in next time. I'm Josh, signing off. Thanks so much for joining me. Y'all have a great one.